China has taken multiple steps to rein in the massive tech companies they have fostered in the last decade and a half. So here are just a few of the proposed rules. Tech companies should not provide false data, including inflating the number of clicks on a piece of content. They should not hide negative reviews and only promote good evaluations of a product, which is often commonplace on sites like Alibaba or Amazon. And internet platforms should not make efforts to influence user choices, essentially saying they can't push users to their own content or services while browsing another. And for context, this is something Google has been accused of across the globe. The regulator is seeking public opinion on the rules until the 15th of September. And while these proposed rules have not come into effect quite yet, investors are already reacting. So let's bring in Michelle Schneider. She's the partner and director of trading research and education at MarketGauge.com to discuss this and what else is moving markets on Tuesday. Michelle, pleasure to have you back on the show. Now, China's biggest tech companies lost around $50 billion in market value on Tuesday after the proposed rules were released, with Tencent, Alibaba, JD.com, and Meituan all losing between 3.5% and just over 5% for shares listed in Hong Kong. With all of this new regulation, are we going to continue to see these sell-offs of tech companies in Hong Kong?
Well, at this point, we are so incredibly oversold. And of course, today you're seeing the reaction. So we have the falling knife theory going on here. But I do believe that we'll see some type of support come in at some point. And it may be simply technical because of, just like I said, the oversold condition. We are at a 1% relative strength index on a monthly chart if you look at some of these stocks like Tencent and Alibaba. But I just want to say, in terms of this whole action and these antitrust issues, when you're a state-sponsored capitalist society like you are in China, you can do this sort of thing, things that we have been talking about in the United States. So yes, some of these giants may continue to suffer as a result, but overall, what we're hoping for, and I'm assuming that's the whole point of this, is that the fair play and the competitive factor for smaller companies can start to emerge. So I just want to mention that. But right now, like I said, I think it's a little bit overdone. Maybe we'll see another couple of days. I'd be patient. But if we start to see some kind of a rally, I would say if you have a good low risk against the recent lows that you may want to catch a bounce on.
Yeah, and certainly whenever we talk about reining in those tech giants, that seems to be something that the whole world is having to deal with now as they become bigger and bigger. And meanwhile, here in the U.S., the NASDAQ Golden Dragon China Index, which tracks 98 of China's biggest firms that are listed in the U.S., fell as much as 4.5% on the news. So how much of an impact can something like this have on broader global markets, specifically here in the U.S.?
Well, we haven't really seen much of an impact in terms of the tech stocks here in the United States. And partly, like you just said, Rachel, it's because we can't really do what they can do in China here, even though we've talked about it, talked around it, these antitrust issues. So I think that what we're seeing in the U.S. right now is it's having some of its own headwinds. And of course, any of the China-listed stocks in the U.S. have gone down separately. But some of the giants here, like Microsoft, for example, has hardly budged off the highs, even with the market correcting today. So at this point, hasn't really been much of an impact.
And amid this crackdown, Taiwan's TSMC has overtaken Tencent as Asia's most valuable stock, hitting a market cap of roughly $540 billion after gaining nearly 10% this year alone. Is that more about the crackdown pushing Tencent down, or the increased reliance on semiconductors as it's become one of the hottest commodities in tech these days?
Brent, I would say probably a little bit of both, because we do have the demand for semis improving. We've had, of course, the supply chain issues going on. And of course, the regulations have really what has hit Tencent. So at this point now, I would say that the crackdowns for Tencent has not only hit it hard, but it's been more in the last 6 weeks. It's gone down 45% from its January highs of $100. So I'd say that this sort of rotation into the semis is interesting. Whether or not sustainable remains to be seen, but at this point it's definitely a trend because of the, like I said, the supply chain problems, and also the fact that semis have gotten very, very hot as a result.
Now, taking a look at broader equities here in the United States, the S&P 500 hit a major milestone Monday, doubling its value since pandemic lows in March of 2020. It fell off those highs just a bit on Tuesday, but as we continue to see record after record with U.S. markets, is there concern that we may be in for a correction sometime soon, or is that easy monetary policy from the Fed going to keep things propped up for a little while longer?
Well, today was a great example, Rachel, because if you look at the market, it looked like it was going to start free falling. And then what happened? Powell came out, dovish as always, saying that they would continue to do what they had to do to support the economy. And of course, he can cite real reasons, because the X factors are the Delta variant, for one. Obviously, this geopolitical situation we've got going on right now may or may not affect things going forward. Certainly, the retail sales number that came in weaker than expected today was an issue. So at this point, with the Fed continuing to pump, even though we're seeing it subside a little bit, if you look at what I like to look at, which is the junk bonds, and that's really where you have the companies that have very high yields and high debt. That's where a lot of the bond buying, they've come off, still in an uptrend. But look at the long bonds, the 30-year plus bonds, and those yields are actually falling. That's where the Fed's folly has been. So as long as they can continue to do that until the bubble gets so great, and by the bubble I mean the inflation bubble, I would say that we're not going to see any kind of deep correction, more of a stagnation.
And we'll get a little bit more insight into what the Fed is thinking Wednesday afternoon. Michelle Schneider of the Market Gauge Group, thank you so much.